Hey everybody, this is John and welcome to the free video. So what's on tap? I am looking for some selling in tech specifically for the first couple of weeks in January that could take us back to the 89 on the daily, so 62.05, so about a 250 point drop. Now I know you might think that that's insane. Why all of a sudden, tech's acting great? And it's not a knock against tech, it's just that January, especially the first couple of weeks, we see massive amount of reshuffling. And so I'm looking for money to go into energy and out of tech and then kind of settle things down. One of my favorite butterflies is on Apple, and you can see Apple here already breaching those levels. And what I'm looking at here for targets is simply the weekly 21 period moving average. So for Apple, that would take us to about 164.50. Okay, not a big move from here, but my main point here is I'm not buying the dip, and you could look at selling calls, selling call credit spreads, or even better, I like the idea of doing butterflies with the sold strike down here at that 21. Also, you could do this with XLK for a move down to 61.50. Okay, and you get a nice risk to reward here. It's about a, you doing a $2.50 wide butterfly, you get it it's for 17-cent debit. Potentially make $2.50 on it. So those are the kind of trades that I like. You start off the year with very low risk trades, so your portfolio isn't at a lot of risk, but you have the potential for some pretty big rewards. And from there, in terms of the long side, certainly energy. I mean, if you look at XLE here, there's definitely money flowing in. And if you look at a monthly chart here, you can see there's a squeeze developing. Okay, it hasn't even fired yet, so a lot of potential here going into the beginning of the year. I like EOG. That's one of my favorites. You can see a monthly squeeze is fired here. We are nearing that 1272 extension at about 110.74, but we certainly could blow up past that, possibly even getting to the tree line on a longer dated option. Okay. From there, I do think that there's a lot of red flags in this market in terms of, if we go back and say, oh, everything's going to rally. I mean, to me, Netflix, that's a bearish setup. So I'm actually looking to see if this can spike to new lows. Has nothing to do with the company. I love Netflix. I watch Netflix. But this price pattern is screaming that it's under distribution. Okay. And all that means is that funds are kind of lightening up on Netflix and putting it into something else. Think of money flowing out of Netflix into EOG. Okay, it's not like it's not new money coming into the market. It's money that's being reallocated. And then, of course, for Bitcoin, got a nice bounce here off that 55 period moving average. And I'm looking for Bitcoin to make new highs. The frenzy ain't over yet, so to speak. And then last but not least, I do like here, another trade that I like going into the new year is going long VIX call credit spreads. So get some January options, 2 weeks out. What's nice about this is that when you look at these, the out of the money options are priced pretty high. So you could go here and say, all right, I'll buy the 10s for $1.30, but then sell the 12s against it for 70 cents. You're offsetting a lot of that premium. And now, of course, if it goes to 20, you're leaving money on the table. But if it spikes up to 12, that's a good, it's a good kind of a risk reward. And if it doesn't do anything, then you don't lose $1.30. You lose $1.30 minus 70, which isn't a bad deal. Okay. Last but not least, Wednesday. So today's Tuesday. Tomorrow, Wednesday, after the close. For those of you that have questions about accounting as it relates to trading, we're going to have a group come on and talk about, hey, what are the benefits of setting up an LLC? What are the benefits of going mark to market, which means that you could deduct all of your losses as a trader as opposed to being limited to $3,000. What could you do to set it up so you can deduct all kinds of expenses against trading? What is the best entity to have? That kind of stuff. If you're interested in that, there'll be a webinar. I believe in this email. If you look at the email where you click this video or on the website, you'll see a link to it. And should be a lot of fun. All right. You guys have a good one, and we'll see you at the next update.